today we are going to talk about a topic that not many people know. And to be honest with you, I actually did not know about this until recently. So I had the honor of hanging out with Mia Jones with Freddie Mac, and she was speaking on diversity. And that is definitely a topic that's near and dear to my heart because of, the way that my mom, when she first got into home ownership, she was treated. However, we're not going to be talking about that today. We're actually going to be talking about how to get a Freddie Mac Home Possible loan and use sweat equity as your down payment. Guess you've never heard of that, right? And that's why you're watching this video. Hello, this is David Xie with the Xie Mortgage Team. Home Possible, let's go over what that is at first, okay? So Home Possible loan is a affordable housing loan. It basically provides people with a certain area median income the ability to buy a home with a conventional loan and save on the discount points. So if you get a standard conventional loan, like your credit score, the amount of loan that you're gonna borrow, the loan to value, your debt to income ratio, the type of property, the uses of the property, all get adjusted based on what the risk profile that Fannie Mae and Freddie Mac is willing to accept. With this Home Possible affordable housing, you can now buy a home and use the sweat equity that you've personally put into it with the approval of the seller to be able to apply that towards down payment. So let's go over the way that this works. Let's just say that a seller has a house that you're interested in and it's listed for $200,000. It's an as-is condition, so that's great. We qualify you as the loan officer for a Home Possible loan. So that's this affordable Freddie Mac conventional loan. And then you agree to buy the home as is, and there's the as-is price, which is $200,000. And then we're gonna then put in the contract a as completed price. Hear me out on this. As-is price is $200,000. The completed price, you value it at like a $10,000 or $15,000 repair. In the sales contract, when you're talking to your real estate agent, it must contain a list of repairs, what the as-is value is, and what the completed value is. So those three things are required in a contract. The appraisal cannot be done before the repairs begin. So an appraiser would then have to go in there, evaluate what it is in as-is condition versus completed value. The appraiser will review the contract. They will validate that the improvements are needed to give this home the value, give them an itemized list of the work that needs to be completed and the cost and valuation that it's going to add to the house. At that point, the appraisal comes back, the borrower can then get to work on the house. They can go in there, complete the work. The appraiser then has to go back in, and there's typically a charge of $200 to $250 for a re-inspection fee, depending on your area. And at that point, the appraiser verifies that the work has been completed in workman shape or workman-like manner. At that point, we would get the re-inspection report back, and the sweat equity is applied towards down payment and drum roll, that's my drum roll, by the way. Closing costs, so you can use it for down payment and closing cost. And then basically, the seller will basically receive their as-is sales price of $200,000. So if that's not a tip that you want to take to the bank right away, if you're home shopping and you're finding that there's less inventory and there's homes that need work, that's definitely a tip that you need to put in your back pocket when you're out there shopping and share with the friends and family that you care about. And you guys out there, the public who I care about the most, I want you to know about everything that's going on in the market. If you need a wholesale mortgage and you want to save money and find someone that knows how to do all these loans, I would be honored to help you out. My name is David Xie, and I'm with the Xie Mortgage Team. My phone number is 757-478-8493.